Welcome to Investors Insights. Our topic today is hold your breath in October markets. Yes, we have entered fourth quarter of 2020, and this has been a year full of surprises. And as we move forward, we're seeing strength in the market. We're seeing people start to have a better understanding about COVID-19, and possibly there's medications out there that can help prevent death. We're seeing from the standpoint of businesses open up. People interact a little bit more with safety precautions, but the economy is moving forward. And we think that we can hold our breath here as we go into election season with the national election coming up, as well as this week, the discussion about the Supreme Court. So with all that noise taking place, we've got a lot of information for you today, and I'm joined by my distinguished colleagues, Trey Booth and Ashley Page. Gentlemen, good morning. Good to see you on camera here after an intense debate earlier this morning. So let's start off with you, Trey. You had some great points just looking at the broad-based picture here.
Yeah, I definitely think a lot of market participants will be holding their breath this week looking at financials reporting earnings for the third quarter. We all know that the economy has slowed down, but financials have been particularly hit and have really lagged during this recovery in most of the other indexes. So as we go into earnings season, they're really kicking it off. And so market participants will be watching how financials have recovered maybe, or are they still kind of in the depths of what was an extremely sharp recession? So they'll be the canary in the coal mine for this year's earnings season. On total, analysts are expecting a 20% plus decline in earnings year over year for the third quarter compared to last year. That's large, definitely, but somewhat expected. I think most people know that this has definitely been a rough economic time, but it's also somewhat of a shot in the dark. Maybe one reason why analysts should be holding their breath is that only 69 of the 500 companies that make up the S&P 500 gave guidance for the third quarter. There was so much uncertainty that the companies couldn't even see their own businesses 3 months out. And so what analysts usually use is those corporate guidance to have an idea of where to set their expectations. Without that guidance, we're kind of going into this earnings season rudderless. And so with the financials kicking us off this week, we should maybe get to see some signs of what direction we should expect. And so we can again set our expectations for the remaining of earnings season, which will be very important to how markets react and see if the market is over or undervalued based on the earnings and actual how companies are doing. I think we've been growing a lot on hope, and we've been focusing a lot on politics and the risks that politics have, very important on markets. Stimulus will be very important, the Fed, very important for sure. But at the end of the day, blocking and tackling of equity investing comes down to, are companies making money and how are they investing those profits? And we really haven't gotten that information this quarter yet. So we're beginning to get that blocking and tackling data that we can see looking into the future. Hopefully companies will start providing guidance into the fourth quarter, early next year as things start to clear up. That'll give us a really good picture of how to invest going forward. So while politics may take up a lot of the oxygen in the media, it's definitely never bad to remember that companies are running and turning a profit, and we've got to analyze that data.
Right, and you're making great points there, Trey, which I really appreciated. And I should also mention that this week and in the next couple of weeks, we still may have stimulus talks taking place that could help businesses as well and involve the banks as well.
Absolutely, very important that those PPP loans, the physical stimulus to individuals, all that goes to the bottom line of banks as well. So that's definitely very important. That definitely helps a lot of industries, a lot of companies, and that'll be a big focus. Certainly important for markets.
Right, and also from the standpoint of markets anticipate. A lot of times markets will move before we see some of these economic numbers, and we're seeing strength in the market right now. From our previous vlogs, Adam Van Zant's reported where the S&P 500 is. And right now, as we came into this meeting to do the vlog, it's around 3,500 with a lot of strength behind it in anticipation of the stimulus, as well as maybe, they've been holding their breath. They got the news about earnings as we're moving forward here. They're going to take another breath and now hope that this is the point where we start to turn the corner. Someone this weekend said there's only 11 Fridays left before Christmas. And so, this year is moving fast with a lot of things taking place. And there's a lot of news out there that's very positive. And Ashley, talk to us. You mentioned in the meeting, tying in what Trey was saying about business and also unemployment. Talk about that.
Well, happy to, Greg. The first time unemployment filings came out again last week. And not surprisingly, they were still a little bit elevated above 600,000. And sort of the popular press seemed to think, well, that's not so good and this and that and the other. But really, what we always do is pull the curtain back and ask what's really under the hood. Well, what's really under the hood is that's the lowest level of first time unemployment filing, Greg, since COVID started. So we're still continuing to make great progress on that. That's the least that it was. And the other thing is too, Greg, what was in that figure were 34,000 census workers. That was temporary. Now they've moved off. So really that was, when you get right down to it, it was a little bit higher, than it should have been.
Yes.
If you smooth it out, so to speak. And along with that, the consumer is getting more and more confident as we go. That data is coming out, improving each month as well. So we're still a little bit elevated on the first time unemployment claims, kind of more along the level of where we were in the financial crisis, but far, far better than when all this first started back in March.
Yeah, very, very much so. And with interest rates low, we're seeing the consumer out there, a lot of refinancings, people buying new homes, in terms of automobiles, also people starting to even make purchases in terms of as we head towards the holiday season.
And like you said, Greg, the market really looks to the future. So it's the absolute unemployment data looks bad, but it's the trend that's positive. Earnings may look bad on an absolute basis in a bubble, but when you look at them compared to last quarter and compared to expectations, they may be good. So it's all about where the trend is going, and that way the market can probably send the future.
Oh, you're absolutely right. And we've also talked in previous vlogs about there's different sectors showing a lot of strength and others that aren't showing as much strength. But also keep in mind, we fully believe here at Five Plan Partners in innovation, and innovation is taking place before our very eyes. We'll have an iPhone announcement sometime this week, and everybody's watching to see what kind of new innovation comes out with it, as well as other products and services that companies are going to be offering. So it's going to be an eventful fourth quarter, and we're going to keep you updated through all of it as we look at what's moving the market in different ways, how to connect the dots as much as possible, and how it impacts your portfolio in relation to your financial blueprint. So on that note, keep following us on social media. Thank each of you who have forwarded this to friends, family, colleagues. We have just been overwhelmed and thankful for the opportunities we've had to help new people. Just can't thank you enough. And so we hope you have a great week as we move forward in the month of October, and we look forward to keeping you informed. Take care.